Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Hope I am audible to you. Let me display the PowerPoint presentation. Asian Live Market Analysis. So it is a webinar for about 45 minutes between 5 and 5:45 GMT on 25th of June, that is today. And we will review what could be the possible moves in the market during the last week of the month of June, between 25th and 29th. What could be the possible moves in the case of the majors and also the commodity pairs? So I will present here the derived forecast for the week, how exactly the market is expected to make the moves from today till end of Friday. And also we will do the market reading for today, and on a daily basis you can do the market reading by yourself based on the principles what I have given or the concepts what I have given. And then keep in mind always the trading strategy that is vital in order to sustain in the market. And if you want to take positions, we need to follow the forecast as well as the market reading, and still we need to use the trading strategy to limit the risk and maximize the profit. Now, with regard to the derived forecast, it is an algorithm-based statistically derived forecast. So this forecast is based on various inputs, and as a result, it is a theoretically derived expected market moves. So theoretically derived expected market moves can vary from that of the actuals, or it can be in line with that of the actuals. So these are all the two possibilities. So we derive the forecast and using any type of statistical analysis for that matter in order to narrow down the uncertainty. So when you narrow down using the technical analysis, we find that there could be a support and the market might have a strong support around that, or a resistance around that particular higher level. The market might have the resistance to reverse back. So this is what we derive. But as far as this algorithm is concerned, it is expected to give you whether the market is going to initially rise and then drop, or drop and rise, and that sort of information is provided. As a result, it narrows down the uncertainty. So this is one aspect pertaining to that of the market reading. Then the other important market reading, namely, we note down the initial lows and the highs between 2:30 and 3:30 GMT, or after about 3:30 GMT, we can note down the initial lows and the highs in 4 majors and 2 commodity pairs, and try to use them as a reference level, as the players are also using the level for their market moves for the day 24-hour cycle. Since it is 24-hour cycle, we use the GMT time to track the market, and we also identify what is the initial type of move. Based on that, we derive the sequence of moves they could do it during the day. So when the forecast says that Euro and GBP are expected to make a dip and the rise, then the market reading also says the dip and the rise. Then we wait for the market timings. Namely, if you want to trade in majors, we wait for the late sessions or the early sessions of the day. So early and the late sessions, they handle the majors, and mid sessions, they handle the crosses. So during that early or the late sessions, when they make quick moves, we enter into the market. Our trading strategy is based on that of the algorithm and the market reading, and also we try to find out what sort of quick moves they are doing. We understand very well they are cunning, and so initially they make a false move and then make their intentional move. The false move, if it is on the downside, then we know that they wanted to hit the stops on the downside and then later on gain the levels within the session. So we wait for such opportunities, wait for the downward stoppant. And when they are making downward stoppant and stop cutting the new low for more than 30 minutes, we try to take a buy within a session and then try to keep the hedging order to limit the risk. 30 pips below that, we keep the hedging order to limit the risk. In case the hedging facility is not available, we try to keep stop to limit the risk. And once the position makes profit, we keep stop at entry and remove the hedging order. So at that stage, the hedging order acts only as a stop, and once it is not filled, then we are able to keep stop at entry so that when they hit the stop, we don't incur any loss. So that is the first method or the step we have to incorporate in order to see that we don't incur any loss while doing trading. Then later on, we can maximize the profit using a trailing stop of maintaining 15 pips from that of the market. And when the going is good, we can just change it to 30 pips and then try to keep a limit of 45 pips initially if they are not breached the initial low and the high. Otherwise, we can keep about 75 pips if the swings are optimal and the moves are quick, or we can keep even 150 pips limit in case if they are making the intentional move. So we try to read the sequence of moves they try to do it. So in what way they make the sequence of moves? They make the quick moves alternate with slow moves. Quick moves alternate with slow moves. Quick moves alternate with slow moves. This is the basic pattern by which they try to do it. So when the trader has lost the money during the quick move, during the small move or the slow moves, he is hesitating to enter into that market. So they know very well how exactly that trader psychology can be disturbed very easily by making quick moves. Then when they make quick move in one session and try to make a slow move afterwards, the slow move will be opposite to that of the quick move. Always it is like that. The slow move will be opposite to that of the quick move, and opposite to that of the quick move will be a slow move. So this sequence we need to understand. Then secondly, this sequence, when you use the time frame to differentiate, there can be moves within 30 minutes or there can be moves more than 30 minutes up to 2 hours, or sometimes the move for 2 sessions and the start of the 3rd session. Because without intraday trend reversal, they don't make the moves in the market. Intraday trend reversal can come in after a brief stop-in for 30 minutes during the start of the day. During the start of the day, they can just make a downward stop-in and stop cutting the new low in less than 30 minutes and then try to gain the level slowly. And they try to breach the high and stay above the high during the late session. So this is one type of move. They try to do it with a stop-in. Sometimes they just do the false move, go up to that of the low and then reverse it. That is another way of doing it, and that happens in less than 30 minutes, and that can happen during that of the late session. They pretend as if they are going to drop it when they hold it closer to that of the low and go up to that of the low and then reverse it. Then you find 2 hours move in which it is like a stop-in. They just make a downward stop-in but stay below that of the initial low for more than 30 minutes, then continue to hit the new low every 30 minutes, and after about 1.5 hours they stop cutting the new low and then reverse the market slowly. So after a quick move, the move will be always slow. So we should not be afraid and we should not develop the feel that market is not having the strength. Euro is not having the strength to go up. And so that is how they pretend, but actually they are buyers. So this is how they try to make the quick moves. On Friday, you know that they made an upward quick move, and afterwards those who have gone short, they have gone for the short covering. After the drop, when they have gone for short, and they have gone for short covering. And on Monday now, they just opened it lower and slightly made a new low and set it as the initial low for the day and started holding that closer to that. And then they are expected to gain the levels during the day. We will see how exactly they are doing it. And intentional move is if they continue to hold below that of the initial low for more than 2 hours, then they continue to breach the new low and come down and later on reverse during that of the third session. So identifying the move is the vital aspect. Once you identify the move, you will be able to derive what could be the sequence of the move. And if they are slowly gaining the level, say for example 2 sessions, and the start of the session, third session, you can understand a quick reversal from there, a downwards quick move, and then later on they continue to make the slow rise after 2 hours. That is what you come across whenever you come across the unscheduled data release, like that of the downgrade news and things like that. So if you understand the sequence, then our trading becomes very easy. So market reading is vital, and this market reading can be done by using various methods, but my method is follow the method followed by that of the players. It's very simple, not our own methodology and trying to beat around the bush. Instead, you straight away follow the timings followed by that of the players, the type of moves followed by that of the players, and still our reading can go wrong as long as we are human and we are bound to commit mistakes. We won't be knowing when we are going to commit mistakes in understanding the market. In such a scenario, we try to use the trading strategy to limit the risk so that we are not caught in the market on the wrong side. This is very, very important for us. Then with regard to the initial lows and the highs, Euro formed the initial low 1.2529 and 1.2558 as the high, and GBP 1.5570 and the high was 1.5595, and Yen 8023 is the initial low and 8062 is the high, and you can see that they have made a downward stopper in the case of Yen, and I will explain with the help of the live market quote page. Then in the case of CHF, 95.64 is the low and 95.86 is the high. They are not breached. Canadian dollar 1.0253 and 1.0272 or the is the high, so they are not breached. Australian dollar also 1.0019 and 1.0054, they are not breached it. So you find that they are not breached the high or the low in all those currencies excepting Yen. So let me go back to that of the PowerPoint presentation. I'll give the link for the live market quote page. I'll give the link for the live market quote page. Now I have given it, and I'll also focus the camera over there at the live market quote page. You can see that Euro is not breached the initial low or the high. GBP has not breached. CHF, Canadian dollar, and Australian dollar, they are not breached high or the low. Subdued moves are seen, but Yen 8023 was the initial low, and they breached and formed 8020. And they are holding around that of 8023 now. If they gain above 8023 and stay above, then there is a chance for it to go up. But when they just made the downward stop, and in the case of Yen and holding around the low, indicates that they intend to make some more dip. As the week beginning, they wanted to make a drop in the case of the Yen crosses. So you find the contrarian moves are happening in the mid session, namely Euro negative net change and Yen negative net change, USD Yen negative net change. As a result, Euro Yen has made a dip of 56 pips, and Euro negative net, Yen negative net change and GBP nominal positive net change. As a result, you come across GBP Yen is making about 31 pips negative net change. So negative net change. So they are making the dip in the case of Yen crosses by making downward move, and they could make a downward stop in the case of Yen crosses, and later on they are expected to gain the level. And you find another contrarian move, Euro negative net change and GBP positive net change, and this is again in order to dip Euro GBP, and later on for the week beginning they are expected to gain the levels in the case of Euro GBP and then continue to drop during this month and time frame. Then CHF they are making about 32 pips positive net change, when euro has made about 40 pips negative net change. So it is of a lesser nature, and slowly they are holding it. As a result, euro CHF is unchanged and with 2 pips positive net change. And Canadian dollar, you find it is making 14 pips positive net change, when Australian dollar has made about 33 pips negative net change. So you find Canadian dollar also, they are USD CAD also, they are keeping it at a slightly lower level, so that their crosses can be making downward stop and before making a rise in the market. Now I will go back to that of the PowerPoint presentation and give the forecast, the expected market moves for today. So during that of the Japanese session, they are expected to make a dip and then move upward, and then European session they are expected to make the swing and rise move, and US session again they are expected to make a small dip and then rise. Then you will find that there will be a lot of uncertainty. The traders who have done the buy and sell, as well as the sell and buy, after the rise they sell and then try to book profit during the dips, both will be making profit. So you will find the traders might be giving two different calls, that intraday you can do sell and buy trade as well as buy and sell trade. And this is the last week of the month. So in the last week of the month, you know pretty well, the volatility gradually increases in order to handle the derivative markets. The option expiries, futures expiry will be there. So they will try to hit the stops on either side and bring in the margin call or the expiry of the options. So for that, they are expected to make big upward as well as the downward move, especially in the case of USD yen, because most of the traders, they think that when yen is making subdued moves, it is better to take huge positions in options. So if there is about 20-30 pips gain also, with a lesser investment, they will be able to make money. At the same time, on the downside also, both sides they will bet. But the players are here to see that they earn from either side of the moves of the market. So they will try to gain the levels in order to expire the put options and drop the levels in order to expire the call options. That is how they do it. Either way, if the traders hold till the last minute, they try to earn from them. So smartness is needed in order to trade during the derivative market. So ultimately, we have to understand it is a man-made market, and the entire traders' positions are known to that of the players. So we are not having any clue. So they have all the clues, and they can make all decisive moves in the market. So we need to understand how we have to outsmart them. And you know, in the ITC conference, it was derived without any ambiguity that only if you have the insider information, you will be able to trade. So finally, I'm able to understand that the analysts of varied countries and also the experts using various type of techniques have come to the conclusions that the market inside information is vital. So when the inside information is not known to us, what we can do? We are helpless, really. But if you think that we are helpless, then really we are helpless. But if you keep further thinking, or if you try to make further thinking with regard to that particular situation, whatever be the hidden agenda of the players, they have to reveal it in the market. So they cannot just keep it as a closed card with them. They have to reveal it in the market. So when they make a downward stop, and we understand that they got the inside information that the traders are long. They are trying, and the stops are closer to that particular psychological level. So they try to hit the stops there. It doesn't mean that it is really bearish at that time on the downside if they make a move. It is only to hit the stops. They are trying to do it because predominant of the traders are long. So in such a situation, when they make a downward stop, so when they make a downward stop, and if you understand that within 30 minutes they are reversing it, after the downward stop, and they intend to make a rise. So during the downward stop and the cunning move, we try to enter into the market. So we always wait for such quick moves to happen in the market, then enter into the market. Then you will be able to see that within a short time frame, we will be able to close the position. Instead, if we simply commit a position and wait in the market for a longer time, our patience will be tested and we may lose the patience and do distress trades. So always wait for such quick moves. That is, they reveal it as a quick move. So when they try to hit the stops on the downside, understand they wanted to gain later on. If they make an upward stop and understand they wanted to drop the market, so that the short seller stops are filled, and when they drop, the short sellers are not benefited. Similarly, they make the downward stop and then gain, so that those who are holding the long positions are not benefited because they are stopped out. So in this process, the traders have developed the tendency of trading without a stop. And so it is not something new to that of the traders. Traders know very well, but they think that avoiding the stop can really help them to make money. But the players know how exactly the traders can be induced to liquidate the long positions. In case predominant of the long traders are long and they keep the stop, they hit the stops and try to read what are the pending positions. And if they find that the traders are holding still long positions without a stop, they continue to drop for 2 days, for 1 or 2 days. Then the traders develop the fear and they just use any sort of attribute, any sort of market information or the breaking news or the fundamental data release and highlight it and continue that drop. In that process, the long holders lose the patience and they also see that the usable margin is getting eroded and liquidate that position. So it is next to impossible to escape from that of the players, and just avoiding the stop is not going to be the solution. That is what I am trying to tell you. So the only way is use the hedging to limit the risk in case if you are caught on the wrong side. Everybody is thinking similar and try to take positions, and the players know that all the traders have taken the long. They will try to make one more push on the downside before making a rise. So at that stage, if your position is hedged, then you can use the trading strategy to earn from that of the hedging, or you can just close the hedging in case it was filled during the stop. These things are to be understood based on the time frame they use in order to make moves in the market. Now coming to the forecast for the rest of the days in the week. Today is 25th. I just explained to you they are expected to make dips during that of the already they have done it during late year session and then gain the levels. So still they are not breached the low or the high in the case of the currencies, and excepting that of the USD yen. So it shows that they wanted to handle the yen process to start with. Then later on we will know, based on the traders' commitment, they will try to make the moves in the market. Now on Tuesday 26th, they are expected to make an upward gap opening instead of a downward like today, and then make swings and gain the levels during that of the US session tomorrow. And that gain could be a very significant gain tomorrow. And keep in mind, it is the last week of the month, so they gain quickly, drop quickly. Both sides they make big moves in the market. Keep it in mind. Then on Wednesday, they are expected to make a deep downward stop and then try to gain the levels from that of the European session again. Then Thursday, they are expected to make the lower level swings, and Friday, they are expected to make whipsaw moves on either side. So you could come across initially a dip during that of the Japanese session on Friday, and then continue to gain during that of the European session, and US session they are expected to make a quick dip and then make the rise. So they are all the expected moves. Either way happens or it's bound to happen, and they are not expected to make the shift in trading zone in this particular week. So try to do only swing trades and try to do buy when they are making a quick downward stop and book profit during quick rise, and don't wait for the bigger profit as a position trade. Then probably they may show the loss again in the position. Then we might become disgusted. So let me minimize the PowerPoint presentation and try to answer to the questions which are asked here. Meanwhile, I'll focus the camera over to the live market web page. So if you've got any questions, kindly ask me so that I'll answer to those questions pertaining to the other market. Then KK has asked the question. Expected low for USD Swiss franc in this week. Is it Swiss franc? I suppose. Okay. See, USD CHF is expected to gain the level slowly in this week. Probably 95.10 or 95.20, they may just show it during the downward stop, and afterwards they are expected to slowly gain the level. Because it's the last week of the month, there is a great chance that they can quickly gain the levels in the case of USD CHF. By first week, they should be able to go above parity in the case of CHF. Then Shan. Euro ASD looks like it may test 1.23 or below this week. Yeah, downward stop is possible as they had done it, because Friday they just closed it around 1.2570 and then opened it lower and started gaining the levels. And I mean, they just opened it lower and then formed a new low, and then they are holding around that. And it appears that it could make further drop, but they're expected to make a dip in the case of USD CHF and change the market sentiment, and then gain levels in the case of Euro and GBP. But quick drops or buy opportunities. But they may not go to 1.23. They may just breach 1.25 if they find a lot of stops below that. Then in the case of GBP, they are shown the positive net change, and they are expected to make a downward stop and then gain the levels, and make an upward stop and then dip again. That's sort of either way stop and they are expected to do, and induce the traders to build up the positions. But avoid building positions. You better book profit when profit is seen. And those who got the hedging facility, then they can simply make very good money during this sort of moves. You just when the position is hedged, suppose you take a decision that I'll buy near that of the low when they come closer to low, and not breach the low for 30 minutes as a false move, 10 to 30 minutes. Then you try to take a buy when they make a downward stop and keep stop at entry. And you know that GBP is a currency, they try to use it in order to create sentiment, and then book profit when they make further drop using a trailing stop and the limit on the downside, and keep another hedging order to limit the risk of 30 pips or 20 pips, whichever is convenient for you. Then you can see that on the downside, when they make a move, you are able to book profit, and later on they are expected to make the upward move as well. At that time, you will be able to book profit on the upside, on the buy side. So if you use the hedging order, you will be able to do either way trading without any constraint. And because the first week and the last week, they will make volatile moves. The second and the third week, they will make trending moves. Then probably if you are struck, then you may have to wait for a few more days to book profit. But in the case of Euro and GBP, definitely they will be making volatile moves, either way moves, because they cannot continuously rise or continuously drop, as you know that the traders commit either way positions in the case of Euro and GBP. The volume is relatively high in the case of Euro and GBP when compared to the rest of the currencies. That's why they make such moves. In the case of crosses, the volume is relatively very less, and the players try to make one-sided moves. Then Scooty, how much dip expect Australian dollar? They have done the dip in the case of Australian dollar, and if needed for the new week, they may just hit the stops below that of the parity and then start gaining the levels. And they went up to 1.02 this time last week. And this week they are expected to go to 1.03, 1.04 area, the case of Australian dollar. And in the month of July, my forecast algorithm says that Euro and GBP are expected to make aggressive gains. Keep them as one of the information. Then CSW, how you expect in Euro Yen and Aussie Yen direction this week. Today they are expected to make a downward move and probably you can make a buy. And then tomorrow onwards they are expected to make the rise. Otherwise, keep away from it today. And tomorrow during the start, when they make a small dip and form the low, at that time in the yen crosses, you can take a buy. So the quick rise will happen. Sell and buy trade may not be very wise at the lowest level. Then copper. What is expected of oil during the last week of June? Oil is expected to come back again after making new lows of 77, 78, etc. And it is expected to come to 85 area. Then continue to make the slide later on. Shan, does it mean that the range for Euro and GBP will likely to be 150 to 250 pips? Yes, very likely. Probably you can say that within 300 pips range, they are expected to make quick upward and quick downward moves. What is expected of USD INR? Will it touch 60? I doubt very much, but they have shown new highs in the case of USD INR, weakening it. And the main objective of weakening it is inducing the traders. Now you find that it is, or they have opened it lower with 66 to 68 pips downward, and they went up to 57.20 and come to 56.42, and they are expected to trade in this range today and slowly firm up during that of the day, and later on they are expected to make the slide during this particular week, because in this week you come across a lot of options to get expired in the currency market, and they are expected to make big moves straight away. I'm expecting USD INR to come on the downside. That means INR is expected to gain considerably during this particular time frame. This week and next week we will come across phenomenal change with regard to the market sentiments in INR. In most, what are expected moves for USD CAD today? And as far as USD CAD is concerned, the spread is so low, they will make a downward stop and upward stop. If they make a downward stop, then quickly exit during the upward stop. It is very simple. Always note down the initial low and the high. When they make the downward stop and buy, book profit during upward stop. And when they make an upward stop and sell, first initially if they make an upward stop and sell, then when they drop, you try to buy back. Then William, do you close all positions opened within each session? Yes, most of the time I try to look for the quick moves and try to close the positions within the session. And that is what I have been showing it in tracking the Forex market together webinar. And I always wait without positions for a longer time and spend very less time in trading. Then see, what are the levels to reach out for the gold? Okay, gold, no, it has come down to 1560, 65 area, and it is expected to gain the levels from lower after the lower level consolidation. And next month gold could go to 1620, 1630, but the volatility you should be able to sustain. And month and time, the volatility will be very high in the case of commodity market. Not because most of the trades are derived trades there, futures and options and callers. Do you expect USD yen to trade around 84? Yes, it is likely to go it, but still they will try to make a downward stop and an upward stop and downward stop and an upward stop on a daily basis. But it's slowly they are expected to gain the levels. So from 78 area, you know that around 79, how they have been making 78 as the new low and showed the quick downward move in order to gain the level. Now every day you will come across a downward stop and say they have done it in the case of USD yen, when all the other currencies are holding and they are expected to make the upward stop. And slowly they are expected to gain the levels in the case of USD yen. Probably it could become aggressive currency in the last week of the month. From this week and next week could come across more aggressive moves in the case of yen, USD yen. So you can take positions. And during the second and the third week, they keep yen in the sideline and actively handle the majors. Then Moses. What kind of aggressive changes is expected to in GBP and Euro in July? Is it USD gaining move? No, it is USD weakening move. So they are expected to make very good gains in the case of Euro as well as GBP. In a conservative estimate, they are expected to gain at least 300 to 500 pips in the case of Euro, and here about 400 to 700 pips in the case of GBP in the month of July. In Moses, what kind of, okay, then market timer. Do you trade your own money? No, I don't trade my money because from India we are not expected to open trading account. There is a restriction from government. Okay, thank you. I'll come back to the and just focus the camera over that of the live market quote page. PowerPoint presentation. So with regard to the initial low and the high, in the case of Euro, they just breached the low 1.2529 and they breached it by 2 pips. Open it. And hope you are able to see this both. So they formed 1.2523 as a new low, 1.2529, and GBP they are not breached, but they are just here, and USD yen they just made the downward stop and gone up. So 20 they formed the low, and now it is around 80.24, and CHF the high they have breached and formed 95.92, 95.86 was the initial low, initial high. And in the case of Canadian dollar, they are not breached the low or the high. Australian dollar also need not breach the low or the high. So which indicates very clearly that only in the case of Euro they have breached the low, just to create the sentiment that it is bearish or something like that. And holding GBP and making a dip in the case of Euro, you know very well, it is mainly to lose the level in the case of Euro GBP cross. Now with regard to the forecast, dip and swings around this level between the low and the high could be seen during Japanese session, and swing and rise moves are expected during that of the European session, and US session there could be a dip and then further rise. So it is last week of the month. Keep it in mind that you can only do swing trades because the market is expected to make sudden turnaround. So you might think that the going is very good on the downside and suddenly they may reverse and take it upside. And you will think that, okay, the downswing is over and they could make further upward move and suddenly they will reverse. That sort of uncertainty they are bound to create during last week of the month and the first week of the month. So cautiously trade using the hedging if the facility is available, and limit the risk and maximize the profit during the day, during the trades. So I take this opportunity to thank FX Trade and also you people who have come here to listen to my webinar. I will post the expected market moves on the daily basis in my blog, inoindustries.com/blog. Then I'll come back on Thursday, 28th June, and try to review the market, the first 4 days of the market, 3 days of the market, and give the forecast for Thursday and also review what I have given, the market moves, and whether they are coming true or not. We will review it, and also we will just derive the expected market moves for the last day of the week, namely the Friday and the month end time. So thank you one and all. See you on Thursday.